Hey everybody, it's CryptoBIRB, it's Adrian. Welcome to the very last stream, the very last webinar, everybody, of 2021. We're going to summarize what was happening for the entirety of 2021, all the ups and downs, all the upswings and downswings, inside and outside crypto. We're going to touch upon legacy markets as well. I'm going to share my thoughts and honest expectations for Q1 2022 and what in general to expect for for the next quarters, for the next months. Everybody, if you are ready to hear, well, what's coming, what might be coming, to hear what's changed, if anything's changed, make sure you stay tuned. We are going there right in a second. Beautiful. Let me know how you guys are doing. I can see your comments. Awesome. Hello, everyone. Hello, Sultan Shakir, Garrett, Jared Menting. Sorry if I'm mispronouncing that. Hope you guys are doing okay. Let me know where you're writing from. This is the final webinar of 2021. Everybody, this has been quite some wild year, wild couple of months, kind of a bit different. Tiny bit different, kind of different from what I had personally expected for Q4. But does it really mean it's necessarily bad? Doesn't mean the bear market is already in? Well, not necessarily. We're going to discuss these points for the entire stream. Hi to everybody. Texas, Canada, Kyiv, Ukraine. Cześć Anna. Cześć Marceli. Hi to everybody. Please keep posting the questions. I'll do my best to cover at least some of them at the end of the stream. And the overall goal for this meeting on today's evening, on Thursday's evening, is to let you guys chill a bit tomorrow. I host these webinars on Fridays evenings, but tomorrow is actually New Year's Eve, New Year's parties across the globe. So I don't really expect anybody to kind of like get overly busy with crypto. And that said, I decided to get you guys some thoughts, some tips, some overall conclusions for what we were looking at in 2021, and what we would be looking at in 2022. And let's kick off, everybody, with the early outlook of what was going on, right? So the price action of 2021, if we are to place the date somewhere, and if we are to put it, I think it's 365. Where does it go? Does it go anywhere? Let's just move it then manually to the very start of 2021. As you can tell, because this is the chart of Bitcoin laid over the chart of dollar index, right? This bottom one is a dollar index. On the left scale, you have the units, the measures, currently in 96.087, while Bitcoin trading at 47,620. Okay. And having the entirety of 2021, which is basically marked from this tiny period. This, guys, has been the entire part of 2021. Like, it is not spectacular for crypto, if you will, right? What we saw for the entirety of 2020 on the opposite end was pretty massive increase that started off with an entry pump over the new year, then COVID crash in March. Okay, that literally made the dollar, of course, as the safe haven, as there was a run for safety, the run for security of one's funds. People were chasing, running away from stocks, running away from any risk on assets, from risky assets. They were taking the risk of risky assets out of crypto, out of stocks, which made crypto and stocks collapse, right? And 2020 brought this massive upwards trend ever since the collapse of COVID crash below the support of $6,000 for Bitcoin. And later, as 2021 opened, we guys were moving sideways for the entire year. Of course, while breaking, couple of crucial records. Of course, the all-time highs, 40,000, 50,000, 60,000, etc. We were basically moving sideways, right? There is clear difference between the price action, the market action of the past year, or even the majority of 2019, which was for most of the time kind of like in the declining mode. Here we were moving in the sideways, right? Out of question. This year has been under the sign, under the category, under the name of consolidation, right? What does that mean? Well, consolidation is a period where the market takes a breath, right? Now, of course, everything is obvious in the hindsight. While analyzing, though, the directions, the trajectories on the markets, we have to understand how to approach it holistically, like wholly, fully, right? And being able to look at this market, in a form of trends or lack of trends, is something that defines potential, grounds for the upcoming movements, right? So, out of question, 2020 was an increasing market. 2021 has been of accumulation inside this rectangle, inside this box, right? We were swinging back and forth between 65,000, low 30,000 or 28,000, 69,000, etc. Right? We're finishing somewhere, where we kind of like got somewhere where we got in early January or February. Okay, so we made the full circle. We made the full swing, as in sine curve, just piece. We almost came back to where we started. And this tells me that anytime the market takes a breath, it takes a breath in the break of the prior lasting trend, right? And how is that relevant? Well, more often than not, especially in the larger context where we saw 1, 2, 3, and 4 waves so far. The first wave of Elliott was supposed to end here, but it eventually got extended with the Evergrande news that failed to close for the all-time highs resistance, despite some local strength that you guys were seeing in the markets. This makes me think that, with the year going sideways, we had this sort of like an accumulation going on, or should I say reaccumulation. The proper accumulation was going on, of course, at the bear market 2018 December through April 2019. This was the proper accumulation, of course, right? But here we are talking about the reaccumulation. The market wasn't really institutionalized just yet in 2018, early 2019. We are quite, I wanted to say fully, but we are not fully institutionalized yet, but we are way more institutionalized than we had ever been before. And you can tell by a couple of the on-chain metrics, which we're going to also discuss over. You can tell that this has been, for most of the time, especially whenever the market kind of like, just had these massive retracements, the 55% retracements, then now 40% retracements, heavy retracements and heavy pumps, but still trapped inside this well-defined rectangle between 29 and, let's agree, $30,000 to $60,000 or $70,000. It doesn't matter too much, because what matters is that we're moving sideways, and sideways means no direction, no consensus, and taking a breath, taking a break, taking a second step back. But usually, and more often than not, these movements come as the continuation periods, right? When the trend is strong, and you can tell that the trend is strong, the prior trend is very strong, as in massive explosive movement in the upwards direction ever since the flooring process of COVID. This usually follows up with the direction of the prior trend, right? Because of phenomenon that is known as momentum. Momentum is the money. Momentum is the overall trajectory. Momentum is what moves the market in a specific, well-defined direction, right? This is this consistency in the direction, and this consistency in the longer period is upwards, right? We're not talking about the bear market. We're not talking about like this global 10-year long upwards trend that Bitcoin has. We're talking about the regular cycles, and the regular cycles tell you that we are seeing it sideways after a massive upwards trend. And this instance is usually a continuation pattern because of momentum. Momentum makes the trend persist, right, until it lacks the momentum. For here, it's a slowdown. It's a slowdown, but within the larger context, the overall institutionalization of the market, the overall strong holders that, time after time, again and again, day after day, you hear that strong holders are accumulating, that strong and smart money are accumulating on the dips, that the reserves are actually just climbing up. You can also tell that. I think I quoted my friend's tweet of Dylan up there, where he posted basically this, that long-term holder cost basis and spend price. Okay, the cost basis is somewhere, around 17,000, and the spend price for the long-term holders. Okay, for the spend price is 33,000. With this being currently at Bitcoin, with the Bitcoin price at $47,000, this makes it, guys, a pretty much of confirmation, aside, like, amongst other metrics, which I'm going to bring briefly on the on-chain side. You could see as well my good friend Will Clemente commenting on the liquid supply very often, where the liquid supply would increase on average over the course of the corrections. This brings to me another proof that this is more of continuation pattern, right? Initial plan was to have conservative closing to the bull market this year at this time that we're talking. This didn't happen. For many reasons, right? But it's actually, of course, obvious in the hindsight. Everything is obvious in the hindsight, but nothing is obvious when the trends are being created. And I think it's good and appropriate and reasonable to assume the worst cases, to assume the bull market was supposed to end in the 2021, right? In order not to be surprised when it actually happens. The worst case scenario is something like your something that you call maximum adverse excursion, the maximum level that you can allow a trade to go against you, right? The maximum difference. And when you're ready, when you are prepared for the worst, you can also patiently wait for the best, because you're protected. And the protection for the money, for the capital, is something that is definitely the most important. And while looking at it, whatever happens inside the box, and I mean whatever happens for you, as long as it swings within the well-framed boundaries in a range bound, it can swing back and forth forever. It can fucking whirl, just go back and forth, left and right, and it's still not going to be trending. For the trend continuation, from the technical point of view, it is necessary to have the proper breakout, retest, or reclaim, if you will. This sequence of breakout, retest is called the reclaim, and the retest that holds, that is rounded, not really faked, just like you saw this local highs faking with the Evergrande news coming out at the very same day, hour, and minute that Bitcoin peaked, interestingly. And as long as you do not see a proper close through the all-time highs, a proper close which is like a proper monthly or weekly close over the all-time highs, and I mean not like just breaking the resistance and then climbing back, or I should say dropping back, inside the range. So as long as you don't see this, it remains under the impact of sideways, right? Sideways, which is choppy, but it is quite a wide range. It is quite a wide range of consolidation of $30,000-$40,000 base. $30,000-$40,000 base based on a technical analysis gives you potential targets equal to the very base size, right? So if it's an upwards target, then this 30,000-40,000 breakout size of the breakout could get you from 70,000, from 60, 70,000, 30, 40,000 will get you to somewhere between 90 and $110,000. This is technical target just for this period of something that I dare call reaccumulation. In case of a downwards breakout, well, you would come up with negative numbers, basically, right? This would get you like negative targets, which doesn't really make much sense. Another day, as we are heading to the close of the year. This is very useful to actually have a look at the previous years for how it was closing, right? So let's just have a look at how the previous closes looked like. Before we go, this is an actual. Let me actually just show you very quick. This is an actual combination and then comparison between the Bitcoin's price action on the upper half of the chart, and in the lower half of the chart we see the commodity index, the GSCI futures, commodity index, Goldman Sachs commodity index futures. Okay, you can tell that, well, for the entirety of the period from March, from the COVID crash, post-COVID crash, the commodities have been remaining in quite a steady upwards trend, way better defined than what Bitcoin had, right? With the start of 2021, you guys were seeing quite a different approach on the commodities, as they were clearly uptrending while Bitcoin was going sideways, right? This is also pretty interesting, well, phenomenon that I'm going to also focus on later on. But before we do, let's actually have and dive into the daily candles, and let's move to well, to the start of 2021. Let's see what was happening a year ago at the very yearly open, right? Let's have it. Let's anchor it. 2021, 1st of January. Let's see, right? This is something that we can hide, actually. This is, well, this was the candle on the yearly open, right? The yearly opened with the new highs. Before we were trending upwards, there was a steady upwards trend in December, just like it usually has for Decembers. This was different this time. Usually it has a strong upwards for crypto, for Bitcoin, for altcoins, lots of alt season, altcoin windows, if you will. We opened the year pretty strongly, right? We opened the year with a new high already. The day before, which was, of course, 31st, which is kind of like a period of tomorrow, to well, to the new year, right? You are seeing two spinning top candles, two small spinning top body candles, which were, and spinning tops are usually of accumulation. What you see, let's say here and under this candle is, well, it opens at one point, it swings down, it swings upwards, right? And it closes pretty much at the same level. This is what constitutes and creates the candle body, which is really thin, the real body, and quite a wide range, right, of legs, wicks, shadows, no matter how we call that. And by the way, I hope you guys can hear me well still. Please let me know very quick in the comments if this is well, if this is understandable, if you're catching up. Let's keep me posted here. And if we're looking again at the day, this was off a strong open, right? If we go back in time even more, if we go back in time to well, to 2020, very opening of 2020, right? see, let's pin it again. The 1st January, 31st, 31st of December. What we were seeing here as well was kind of like a different, I should say, different than 2021 opening, but similar to what we are seeing right now. We were before opening the year, we had been kind of like trending down for some time, then evolved into a sideways movement, right? So we had the similarity, as in the sideways movement had been lasting for some time already, and we were seeing this non-directional kind of like a noisy market. And well, a day or two after, right, you guys were seeing somewhat of an upward trend, right? So we had in the past, in 2021 open and 2020 open, we basically saw a bull market, I should say bullish trends, upward trend continuing. If we go back in time even more to December and the very depths of the bear market of 2018, the time that it was closing, 31st and the 1st January. Okay, boom. Did it move? Come on. Okay. Similar story. We were, of course, in a heavy downtrend after with the capitulation of miners. The miners were capitulating because the costs of the mining operations of the procedures were actually, just exceeding any profits. The miners were underwater. This doesn't really happen too often, but at times it gets, and it causes the capitulation in the market whenever the miners are selling off because of being unprofitable. You were seeing the market had been trending down for some time, right? But still moving in this sort of like a sideways thing, right? Here we saw a local yearly, open with a local tiny follow-up pump from like 3500s to like 4100s, then followed by another continuation of the sideways, right? So this is at least in the short term, this is the third instance as we move back in time that Bitcoin was moving upwards freshly after the yearly open. Okay, this is somewhat of a conclusion already. If we go back in time even more, right? Start of 2018, January 2018, January the 1st, December 31st. We were seeing downwards trend, of course, with the blowoff top. This was a proper confirmation for a blowoff top, everybody. This proper candle was a proper blowoff top, right? Yearly open, another case of short-term bullishness, at least couple of days of bullish price action, right? So out of the past 4 years of data for the yearly opens for Bitcoin, we are seeing some repetitive pattern that Bitcoin tends to rise shortly after the yearly open, right? Let's see what we had back in here, 2016, 2017, December 31st, 2016, and January 2017. Another instance, right, of short-term bullishness, couple of days of bullish price action with the bull market peak, by the way, right? Local peak that was followed by quite a heavy retracements. So we can tell that these heavy retracements, they are not really, that we are seeing right now, they are not really anything overly special or extraordinary. You were seeing these. You were seeing 30% retracements right before the market was reaching the final all-time highs, right? At least for some time. You were seeing some after 5 years in the past, over the course of past years, you were seeing each and every single time the bull market, I should say, the bullish trend, the upwards trend coming up freshly after the yearly open, right? Let's go back in time even more. We get 2016 January, okay, and December, December 31st of 2015, 2016. Another instance of the bull market pretty much going some boost, right, of the short-term upwards trend getting lined up pretty much for the yearly open or freshly after the yearly open. Going back even more, right, what we are going to see, everybody, was, well, this is where the Coinbase price history starts. But if we go December, this is December. Yeah. Okay, so this is quite some quite some disturbed price action, of course. The market was not trending for some time trading. You can tell that early January we got this huge reversal. Actually, right? So 2014, actually, this is the very floor of the bear market of 2014, right? With the start of 2015, with the fresh yearly open, you guys were seeing and watching Bitcoin bottoming out, right? Well, if the history has some predictive power, if we assume that, right, which to some extent is a fair assumption, although it's not really obvious, right? There is some truth, there is some predictive power in the patterns in the technical analysis that is academically confirmed and proven to exist. It makes us think that it's pretty much safer than not to expect at least a couple of days of short-term rise after the yearly open. They say that as January trades, like January opens, so goes the entire year. Whether or not this is true, that's another subject to discuss. But it is safe to assume that based on the past year's experiences, past 7-year history and backwards, now has seen nothing but short-term upwards increase at this very fresh start of the early open, right? This has a lot of sense, of course. This has a lot of reasoning with people having some tax-free money after the tax returns, that, well, they decide to spend new year, new me. I'm going to get me some Bitcoin. I'm going to get me some Apple stocks and so on. This often happens to be some self-fulfilling prophecy that people, tend to follow for one reason or another. It is safe to assume then that if you get a fresh yearly open with the price increase, then you shouldn't be surprised, right? Somebody's saying it's never safe to assume. There is a saying for it. In general, I agree with this context, that with this difference, that here we are talking about something that is technical, right? Something that is technical that comes strictly from the market, from inside of the market. We're not talking about the situations that come with exogenous signals and exogenous factors, just like natural catastrophes, military conflicts, new pandemics, new hurricanes, destroying all the harvesting for the crops. We are not talking about external factors. We are focusing only on the technical analysis side. And then it is safe to assume certain things, assuming the technical analysis principles and foundational rules, one of which is that a history repeats itself, right? It is safe to assume within the technical analysis categories this way. So I only agree partially to this, but good point. Yeah, and having these conclusions, again, it is not a promise. It is not a promise that we're going to have, of course, a fresh yearly open pump or something like this, but it definitely gets you some data. It definitely gets you some conclusions on what you can expect, because contrary, if the market was tanking every time the year opened in the past years, well, then this would have come up also with some certain conclusion, right? So knowing of that again, let's see all the charts, right? This is a CME chart, which actually right now is trading continuing trading in a range, in a local range between low 40,000s, I should say here in the CME case, because the market was not trending when the final capitulation happened in here towards $42,000. But 42 or 45 on the CME up to 52 is basically, well, the rectangle, the box, right? So if we were to, again, assume similar patterns, similar history repeating itself to an extent, which doesn't necessarily need to be the case, of course. It takes only one trigger, or one tweet from Elon Musk to change everything. So technical analysis doesn't tell you when Elon Musk tweets. Then it would be, well, something to expect, okay, of early push. Of course, heavy retracement, 40% retracements, sitting at the supports of 200-day average. In general, I do not like the fact that we are slowing down on the 200-day MA, right? 200-day moving average slowed down, and it slowed down, well, substantially, right? It slowed down, as in even started slightly trending down, and as a result of the previous heavy retracements. Because it encapsulates the data of 200 days, right? 200 days is what defines the overall market value of the price, of the smooth price of the moving average. Here, again, the fact that we have lost a bit of momentum, a bit of this distraction, a bit of this power, this engine, if you will, like torque, this makes me think that it is more of sideways, right? It is more of sideways as a whole. Here, the market was moving upwards. Here was moved. We've kind of like moved and switched the smooth trend, the smooth price movements to the sideways trajectory. Sideways means no direction, no consequence in the price action. It may easily at one point, I don't know when, right? Technical analysis doesn't have a crystal ball. This is not going to tell you when something's happened. You can throw certain assumptions, but it doesn't mean necessarily needs to come true. And it may happen that, for example, this gap gets filled. This is something that we call a breakaway gap. Breakaway gaps, more often than not, do not get filled until proper bull market ends. So I would be cautious if I was like, I wouldn't be the person to bet with all and hold wait on the sidelines with all my holdings before like I enter, just to have this gap filled, because it may happen that, for example, it front runs, just these lows of 40,000s and rallies back again immediately. As long as it keeps moving within the sequence of higher lows, right? There's not much to doubt. There is not much to doubt because we are moving in an upwards trend. You have the high, you have the low, you have the well, this is the local upwards trend, right? You have the low, you have the high, higher low, higher high, higher low. As long as it keeps moving in this sequence, we are calling that a natural upwards trend, right? While in the larger context, it is of course in a sideways, right? So it's also worth remembering here. Sideways on average means that whenever the moving average moves in sideways and horizontal, this is going to kind of like just swing back and forth, because this is what sideways means, right? So you may easily see price action like that going on for some time. I have no idea about the targets, whether it's going to be $65,000 or $40,000 at the floor. All that I know is that the technical sideways is defined between the high and the low, between the high extreme and the low, which is 28,800s and 69,000s, right? So this is all I know. And the higher it goes up at the resistance, the worse risk-reward ratio it is. The reward to risk, I should say. The worse payout it gets for the longs. And the lower it goes, the worse payout it is for the shorts. And knowing of that again, this makes me think that, again, is locally we're looking at something that is bound to reverse soon. Unless exogenous factors, just like these catastrophes or military conflicts or wars, escalations, etc., expand or emerge, I would expect this to be a short-term accumulation, especially that the fear and greed index has been tagging the extreme fear for quite some time already, right? So extreme fear is usually for the sentiment what contrarian traders take as an entry signal to an extent, or as an entry narrative other than the signal. Heavy retracement finished by sideways, followed by sideways, is usually what we get to call accumulation, right? Similarly to what we saw in here. But the fact that we're moving sideways just makes me think that we may see a bit more of the sideways movement to unfold, which means that perhaps there is more wait time. There's more to wait. Perhaps there is a couple of more weeks that we will have to move in sideways. Perhaps an entire month, perhaps 2 months, perhaps the entire January and February would be of sideways. Continuation between the bounce, the range bounce of $30,000 and $60,000 or $70,000. But this is what I read. This is what I read. I mean, I would expect like this the fact that 200-day average is kind of like flat right now. This doesn't really speak in favor of bulls or bears. It speaks in favor of range and sideways and chaotic, non-defined movement that may take time to unfold, because the market on average is moving sideways right now, at least since the start of December, right? So more chaotic price action, more chop. It seems to be coming in the early weeks. So perhaps, again, just a thought. I may always be wrong about it. But assuming the previous year's history, which makes people, use it as a self-fulfilling prophecy, because people see, okay, the past years the Bitcoin has been moving upwards entire like time after time after the year, every year open. So I'm going to buy it because it's going to increase again, right? So this self-fulfilling prophecy may actually just make Bitcoin break out of this accumulation range, perhaps let it go slightly bit upwards in the 60,000s region. This would make a lot of sense, because overall we are quite oversold already. Tagging with the proper mean reversion, 40% retracements, regular volatility, many reasons to expect that yearly opens. But then knowing that we're flat on average, this would make me think that we would continue swinging, back and forth, perhaps in a narrower range between 45 and 55 or $60,000. Who knows, right? But the conclusion I have is that the first days, while I'm thinking out loud, the first days of January could be of some more upsides, right? If the history is to repeat itself. And then perhaps recovery, setting a local time frame recovery, some short-term recovery, relief, rallied up to like $60,000. I wouldn't necessarily expect immediate breakout to all-time highs, just because I mentioned this flat 200-day MA. I don't really feel bulls are fully in favor of this. I would bet more of the rejection, more on the rejection and continuation in sideways before we get and unfold the full plan of 22 getting the peak, the blow-off tip, the blow-off peak, blow-off top, and the bear market starting. Locally, you can tell we're moving in a bottleneck, which is kind of like tight for the volatility. The average volatility gets you somewhere between $45,000 and $52,000. It's way narrower than it usually is in the explosive movements in a trending market conditions. Any breakout outside 52 or 47, $45,000 can be of a more explosive move to follow up in the direction of a breakout. Locally, on an hourly time frame, we are looking at local support, which is actually defined at low 46,000s. The support, the demand zone, demand block, is defined between 46,700 and 47,200. Okay, $500 kind of like a block, demand block, approximately $400-500 that the Bitcoin is sitting on right now. Okay, local upwards trend, but it's not really trending well until we break through $48,000. Okay, $48,000 is the current time for the trailer stop, which is the invalidation for the ongoing local downwards trend ever since the 52 kind of like rejection. So only after breaking and successful close through 48,000s we are talking about getting back in the upwards trend locally, right? Perhaps that happens tomorrow. I have no idea. For Ethereum, let's see what Ethereum gives us, right? If we are to, to apply, this is an actual weekly chart, we can get the definition of the trend in here. Let me just check. Well, this is Ethereum, right? Many of you ask about Ethereum. We studied already for Bitcoin's expectations for early 2022. We studied for Bitcoin's case studies of yearly closes for the past years of available history on the Coinbase spot price, with certain conclusions made. We have some, kind of like sketch on what to expect in early 2022 for Bitcoin, if the history is to repeat itself, of course, which is one of the main foundational principles of the technical analysis. Here you can tell that the Ethereum is locally trending upwards, and it keeps moving upwards, finding the support at 36.46. 36.46 is local support, and as long as we are looking at the weekly closes through or above this level, we are pretty much safe in the local upwards trend, right? In case you see a weekly close below, this may invalidate the short term, or I should say the medium term bullishness of Ethereum, perhaps making it go back to like high 2000s or low 3000s. Who knows? Key level is 36.46. That's what I know for Ethereum. For the Bitcoin price, for the Bitcoin chart, as in Ethereum Bitcoin, you can tell, of course, there's been a pretty amazing breakout, and so far there is nothing much to worry. It's like a breakout retest going on. As long as it kind of like rounds up nicely and comes up with a saucer, with this ball of this rounded bottom, no matter how you call that, then it's fine. If it cuts through, then this makes it a proper fake out. This makes it a proper fake out and potentially brings the chances of coming back to the range lows if we are to apply technical analysis on the Ethereum BTC chart. Okay, but what tells me that Ethereum is, of course, still bullish for the long term, no matter what happens. If it gets to like 2500s or 30,000 or 3000, because we have this accumulation so far that is being built, that is being held valid, right? And we are somewhere halfway through the potential, the historical potential that Ethereum has shown for the strength over Bitcoin. Okay. Please let me know the voice quality is okay. I hope it is. By the way, guys, I really appreciate it. The fact that you're watching here. Many people asking about Litecoin. I'm going to cover that in a second. Loud and very clear. Okay, amazing. Tragic Garlic. I love the name. Thank you. Okay, let's do this. So after Ethereum, again, all the past and set targets, that I was initially having on my map for the end of year, as of now, was supposed to have $10,000-$20,000 Ethereum. For all the same reasons that I said, Ethereum BTC being historically somewhere midway through, Bitcoin, is nowhere near toppy for the long term. It makes me think again that all we have seen is this bull market extension, right? This extension. 2021 was initially expected on my end to have the more explosive resolve, the more explosive unfolding the half two of 2021, especially quarter four, which has not happened, which was proven wrong. My initial conservative thoughts were proven wrong in here, and wrong about the time, not necessarily about the targets. All my thoughts, it didn't change. The fact that we waited for a couple of weeks longer well, this doesn't change the chart of Ethereum versus Bitcoin. It doesn't rapidly or overnight change the fact that Ethereum is still oversold against Bitcoin, or like at times, at times the market just doesn't pump as fast as you wish. The market at times, I saw so many times that people, were in my DMs, of course, and asking like, give me next 100x coin in the next 5 days, or give me the quick next 10x pumper in the next day because I need to pay my debt or something, right? And the market at times doesn't need to bother with what your opinion is. The market doesn't care about my opinion. I promise you that. The market doesn't care about what I say. The market doesn't care about how fast I may want certain markets to move. Okay. At times, you are given that, you are given that just like this. But because that is the overall consensus of the market. But here, the market has been moving sideways for the most of the year. 2021 has been the year of the sideways. And at times you just have to wait for it, right? That's it. I'm fine waiting. This is a marathon, not a sprint, just like many traders say. Okay, so I do not give up my hopes. I actually recently loaded Ethereum. I think it was 3700s, 3600s, about a week ago, for quite a heavy six figures in there. I still keep accumulating Bitcoin, although those are not like some huge money, low six figures entering the Bitcoin. If it comes to Litecoin, uh, Litecoin has changed even less. As in, it hasn't changed anything. Basically, we are still moving in this consolidation for the entire year almost. Like Bitcoin has been moving for most of the year in the sideways, but Litecoin has been moving entire year in the sideways, right? Ever since 2021 started, like this is moving in a well-defined range box, right? In a rectangle. So market is moving sideways. The Litecoin is moving sideways, but because it's moving sideways, the fact of the local correction that we saw, it doesn't change the fact that it's moving in sideways, right? You can tell also it's moving in sideways based on, well, since the bull market started for Litecoin, you can tell that this volume weighted average price is going flat at $120. The volume weighted average price long term, ever since the bull market started, is at $120 and it's flat. Okay. So the way I look at it is that this is similarly to Bitcoin, a continuation pattern, right? A consolidation after a prior strong upwards trend is typically a continuation, right? And again, unless the world collapses, unless an asteroid crashes into Earth and we all fucking die tomorrow, unless things like that happen, because TA cannot give you that, right? Unless things like that happen, Litecoin is supposed to continue. And same way I hold my targets and I still hold my Litecoin backs. I didn't sell a tiny bit, tiniest bit of it. Same way I have it for Ethereum. Like I mentioned many times, Litecoin is just is even more requiring, is even more demanding for the patience, just like silver, right? For the legacy markets, it rarely ever pumps, but when it pumps, it is explosive. So here, it's moving in a quite a volatile range, but it doesn't change the fact, the volatility doesn't change the fact that it's not trending, that it's moving in a sideways, and the market taking a breath in a local disruption on the prior upwards trend, right? So this makes me think that this is an overall accumulation, for many reasons, but technically it's an accumulation, it's a consolidation under the resistance in a form of contracting consolidation with the prior upwards trend. Right, this is quite a technical setup for an upside breakout. So I'm still holding my targets for $2,000 for Litecoins. The time has proven time factor is wrong. The time factor was supposed to give you that at the end of a year, right? Which is basically now, but it did not. Here, while discussing, because we covered Bitcoin, we covered Ethereum, we covered Litecoin, let's talk about, well, what's happening with altcoins as a whole. the altcoins as a whole, right, as a whole industry, is also moving in a sort of like a sideways. Perhaps, it has kind of like had these attempts of breakout. It eventually broke back inside the range, right, making this range only larger. This is a market cap, right? It is not having predictive powers, as in people cannot invest in this market cap futures. This is not a futures. People do not really argue over the price or the results in here over the measures, but we can talk and analyze the trends though. And the trend is sideways, right? The market is in sideways, but the price action, but the moving average, 200-day moving average of the market cap, excluding Bitcoin, which is the market cap of altcoins, at 1.33 trillion, is basically moving upwards. So we can tell that, on the contrary to Bitcoin, where the moving average is flat, you can tell here the altcoins are appreciating in value on average as the whole industry, as an entire market sector. Which makes me think that it has bit better predispositions, bit better premises to perform tiny bit better than Bitcoin in the early days of 2022, perhaps, right? Because the fact that we're moving sideways locally as well, and this local sideways being the part of the larger sideways, and this sideways in a sideways adds double uncertainty, double indecision, but the moving average keeps climbing up, keeps ascending, which tells me that this overall may be of better performance, of better returns than Bitcoin, perhaps over the course of the next couple of weeks. Here is an update about. Here's an update that's pretty interesting, but here's an update about the initial case of the Blowoff Top and the scenario for 2022, right? This was drawn by me with the Blowoff Top, with the ultimate out season, and the Bitcoin bear market that was starting. These sketches, these drawings were just to help visualize the scenarios, the expectations I had for the people, for the community. Right here is on the upper side, on the lower side, here's the actual real chart, which you can tell definitely did not follow timely these expectations. Eventually, what are the chances that I'm going to guess exactly the price action of both Bitcoin and altcoins to the single day and hour to the specific levels? Like, they're rather close to zero. It's like if you were win to all roulettes, all poker plays, all gambles in the world all at the same time, and if you were the only winner, right? It's rather low chances. But here, all this part that I had in my mind, I still have it in my mind. With this difference that it's kind of moved in time. Right, we're moving that in time by the sideways period. This sideways period is kind of like a period of the highs blowed by the effect random news. This exogenous thing that made the market move in the technical correction. This is the delay. This is this span. This delayed kind of like in a way. So I would take this time and move all my expectations, at least by this time of the corrective unpredicted correction that came outside of the market, that came from the outside of the market, and see where it goes 2 months after, right? So February, if you remember, 2014, Mt. Gox collapsed in February, right? This was the period that the bull market peaked. 2013, 2014 bull market peaked in February 2014. I would be closely watching February for it. I have no idea if the market is going to peak at that time, but you have the reason to pay the special attention, and especially if the things go north, if the things go well, perhaps February would be some anchor in there. Looking at DeFi, everybody. This is the altcoin cap, and this is the DeFi, right? We're looking at the altcoin cap as a whole, as in the orange, and the DeFi perpetual index. So I was comparing these charts mainly because the fact of the differences. You can tell that here, the crypto market cap was the altcoins cap, as the mainstream altcoins were having the new highs recorded, as opposed to DeFi, right? So it makes me think that DeFi is of better buying opportunity than the mainstream altcoins in general, right? We are still just ahead of the recent lows, the recent highs. Sorry, we are 30% on the downside versus the altcoins, the mainstream altcoins, which are 60%. Well, which is also interesting. Oh, sorry, this moved, of course. Let me change that to percentage. That would be safer, because this is I forgot this is logarithmic curve. So here again, we are talking about the maximum drawdown of 24% on the Altstream, on 25% on the mainstream altcoins, versus the change of 31%. Oh, sorry, the maximum drawdown of 43%. So we have almost twice as heavy retracement on the correction for the black curve, which is DeFi, versus the mainstream altcoins. So the mainstream altcoins have retraced less. The mainstream altcoins have a bit, I should say, worse payoff, kind of like, risk reward ratio here favors DeFi if I were to compare it both, right? Something to watch. DeFi seems to be a bit less bit less heavy in a way, just a bit better valued right now to me. So if you were planning, your investments, if you were planning your investments into altcoins, and you were supposed to choose between DeFi and altcoins, like as in mainstream altcoins of the top market cap list, perhaps this is an indication that it's worth to lean tiny bit more towards the DeFi section, which has been somewhat forgotten. And finally, as we are heading, for the legacy markets as well, overview very quick. What we are looking at here for the entire time that 2021 started in here, you can tell, unquestionable increase in the equities, S&P 500, SPX. You can tell that easily, right? 200-day average. This is a 50-day average. It keeps both keep climbing up, both keep ascending. You can tell that the new highs are being made. Of course, anytime there's a struggle, they would just print more money. It's not safe to bet against the stocks. If we go for gold, right? If we are to check the gold price, where then the gold price, you can tell that for the entirety of the period from July this year, it's kind of like swinging back and forth and sideways, right? Even if we apply the weekly time frame, right, you can tell that, the long-term average direction is actually climbing up, which is 200 week average. 50-week average is somewhat declining. Over the decline is not really heavy. It's rather flat right now. And that's what I meant about Bitcoin, moving like you have a flat average and the market just keeps oscillating around the average, right? With no really clear direction. Here it's moving in a form of a rectangle, by the definition between the mid 1600s and 1900s, right? Anytime it breaks outside, which is eventually my guess because of the upwards moving 200 week average, the eventual breakout would be supposed to take you in the new highs. But the gold is more The gold, everybody, is not really a good short-term investment opportunity. The gold is not really good, I should say, short-term vehicle instrument. Gold is supposed, this is primary, its primary job for gold is to protect you against the inflation, is to protect and store the value, right? This is the main point. You kind of like hedge against the inflation with gold. You don't necessarily buy gold because you assume and speculate that the price is supposed to increase. You buy gold because you want to protect yourself against cash losing money, which is a very valuable tool and investment vehicle instrument for portfolio diversification, which I'm a big fan of. If we are to give it a check for silver, right, you can tell that similar to gold, it's been moving in a, well, closely defined range box. Like, have a look at these reversals here, right? We are talking about quite a big technicality here, quite a big well, quite a big reasoning for supports and resistances acting. You can tell that both averages are somewhat, the 200-day average is somewhat moving down. The 50-day average is somewhat moving sideways. Eventual consensus is sideways. A weekly chart proves that very well. Weekly chart proves that very well. What is that? Let me close that. It's moving here in the rectangle, right? Pretty well defined rectangle ever since the powerful breakout out of the COVID accumulation that had lasted for 7 years. To me, it's similar to Bitcoin. It's kind of like reaccumulation. You can tell there is some ascending, trajectory for the MACD, with some bullish crossovers going on, although still moving in sideways, right? Long-term 200-week average, similar to gold, is moving upwards, is ascending, although not dramatically. It's ascending slowly but surely. Flat performance though, over the 50-week average, right? 50-week average, which is almost 52 weeks, which is almost a year. It tells you that price of silver on average is $25. Anything below is considered undervalued. And the closer to the long-term average it gets, of course, the better buying opportunity becomes. To me, it seems that, again, similar to gold, only a proper breakout retest is going to be technical confirmation for a strong upwards trend continuation for the bull market to resume. But the overall outlook for silver, I love it. If we are also to have a very quick look at the trend spider, to have a look at the overall commodities, let's see what it gives. This was Bloomberg Commodity Index futures. Okay, let's have it as the weekly, or even as the monthly. Okay. This is a monthly chart. Right? And you can tell that commodities have recently been taking, somewhat of a hit. Potential retracement coming up with the bearish engulfing here candle. This is futures on the monthly time frame, so with regards, every candle includes and conveys in 30 days of price action, 30 days of information. This is some serious charts in here. You can tell that on average, the 50 month average, couple of years of price action for commodities as a whole, for Bloomberg Commodity Index (BCOM) futures, is ascending, right? After the powerful breakout in here in February earlier this year, and confirmation. So perhaps some more sideways, perhaps a retest over the resistance, which to make a new support and continuation. This might be the technical point, right? The technical point is definite breakdown of we're coming with the COVID, and at the same time a powerful breakout above it, right? So this seems that the overall accumulation that had lasted for several years before the overall capitulation and the breakout happened. Well, the accumulation has ended already. To me, commodities seem to be quite a heavy point of my portfolio in 2022, especially as the hedge against the inflation to protect my money. Speculation and hope for increases is the other aspect, but I'm not necessarily buying gold and silver or other commodities to kind of like profit or benefit from that as a return, but more as in protecting my capital against the losses coming from the inflationary aspects. I think it's I think it's a pretty fair approach to have it in the well diversified portfolio that should include gold as well. And silver is just a bit more aggressive gold. And more often than not, silver, interestingly, um, is moving very similar to gold, and it often tends to lead gold. Same way that XAU as the miners index is leading gold price spot. The producers, the miners, are leading the spot for gold and silver. Then similarly, silver seems to be ahead of gold a tiny bit. So that's a point worth noting. Uh, and lastly, let's have a look at what dollar has for us. Although remember that dollar is not necessarily the most technical case to consider. The dollar is strictly macroeconomic factor. It's dependent on the macroeconomics, not really technical analysis. Technical analysis can be used in here and applied just to spot trends, just to decide about trends and overall trajectories rather than, oh, it's going to bounce to the support or it needs to fail this resistance. Like, that's bullshit, because the governments, when they settle the strength of dollar, decide about the strength of dollar, to manage the exports and imports, the overall global trade, and the monetary policy, including the the monetary plans on the quantitative easing, or perhaps not easing, but just having some tightening, next year. Then this is what defines dollar strength, right? Dollar strength as in dollar index against the basket of other currencies. You can tell there's been, ever since 2021 started, this was moving in an upwards direction. So dollar was gaining strength against other currencies for most of the year, aside from the sideways that was confirmed in quarter 4 for the breakout. Local sideways is when as well, over the averages, over the 50-week average, over the 200-week average, which is practically flat. The RSI is somewhat oversold, overbought already. You can tell that the MACD is converging. The averages are converging in here. The histogram is declining as a result. It may see some easing, if we were to apply the technical analysis. Although, just remember that TA is just a secondary tool in here. I wouldn't bet it fully on TA just to make predictions. I would make it as a more of a confirmation. And in fact, if you see this local, trend going down for dollar index, then just like I marked in here in the charts, anytime the dollar just goes down, Bitcoin benefits from it, right? Anytime that dollar goes up, Bitcoin just takes a hit. Here, it was quite an interesting case and tiny bit of a different story for quite some time for a couple of months, where both Bitcoin and dollar were used as an inflationary hedge to some extent, as within the floor soaring inflation. So, all that said, everybody, if dollar turns back tiny bit, this would be more likely than not beneficial for Bitcoin, which could support the thesis of local rectangle, kind of like breakout, perhaps some tiny bit of relief, which would make a lot of sense. Also, assuming the history of the past years, many people use that as a self-fulfilling prophecy to look back in the chart and decide upon that. So if they see price increased every single time over the course of last year's, firstly after the yearly open, perhaps they would decide to buy it as well, in the name of pump. So it's come, guys, to the point that we have gone through Bitcoin. We have gone through each and every single year available for the monitoring over the Coinbase chart. We have discussed Bitcoin's case studies over the early closes with several conclusions that more often than not, after the yearly opens, soon after the yearly opens, Bitcoin decides to take a short-term relief bounce. It may happen more instantly, or at times you need to wait a week or two, just like in 2014-15 breakdown you had. Ethereum is still valid on the targets, on the upper targets. It's right now keeps consolidating in a local breakout retest on Ethereum BTC chart, which makes me think that again we still have a lot of upside, assuming no non-technical issues happen, no pandemic, no biological wars, no third world war emerging, militarily wise, and etc. Litecoin is even in a larger consolidation for the entirety of the time, for the entirety of the year so far, which makes me think that again, nothing has changed after the local increase, same way that nothing had changed after the local increase. Now after decrease, it keeps moving sideways. It keeps moving in a range bound. So I'm still holding my Ethereum, still holding my Bitcoin, still holding my Litecoin. Although I keep diversifying into gold and silver as well. Real estate hard assets are definitely good hedge inflationary assets to have. DeFi seems to be, in the name of a wrap up, DeFi seems to be tiny bit better value than the mainstream altcoins, after getting tiny bit deeper retracement, and overall having a bit more to catch up on the upside, having more space to grow. DeFi has seemed to be forgotten for some time. This bearish sentiment across the market, and the fact that many people have forgotten about DeFi at all because of NFTs, because of mainstream altcoins, makes me think that again, this is what may generate good buying opportunities in the near future. Legacy markets, in case of dollar, just getting some fresh air as in correction, this may be supportive for Bitcoin's local upwards thesis and relief rally, short-term relief rally through the yearly open anytime soon, if that is the actual case. S&P 500, I wouldn't bet against stocks. It keeps climbing up. Stocks only go up. That's what they say. Gold, silver keep moving in consolidation. Eventually, or because of long-term averages going up, 200-week averages are pointing upwards, which makes me think that this is the long-term trend that you have to wait for, and eventually would break the upwards breakouts. All of these conclusions, guys, were supposed to be delivered in this hour and almost 15-minute webinar today. I hope this year has been somewhat good, at least better for you than the previous years. And I really hope and I wish, guys, that 2022 is going to bring to many people the plans that were not really delivered in 2021. That's what I will be aiming at on my end. That's what I would be hoping for everybody to get as much love, as much good money, wealth as they can hold in 2022. Those are my best wishes for everybody. I think it's time to slowly close on this stream. I really appreciate all the kind comments. Judidia Coletrain, sorry if I mispronounced that. Thanks so much for all you do, Adrian. Much love and respect. Much love and respect back to you. Tragic Garlic with a good note and beautiful dog in a profile pic again. Thanks for your excellent content from the Birb Nest channel. Great content from all the team. Huge congratulations to my beautiful team. Again, the Birb Nest team rocks. Those are beautiful people, hardworking, beautiful people. Fantastic crypto source, in my honest opinion. Have happy and a very successful new year, Birb. And same goes to you, brother. Same goes to you. John Bethier, happy holidays to all. Krzysiek, Thanks a lot for your hard work and sharing knowledge with the people. Love you, Birb. I love you back. Thank you. Let's get it in 2022. And Anastasia, flowers. I love flowers. My wife loves flowers even more, I suppose. Uh, and that is also what I need to be running. All the best wishes from the bottom of my heart. I hope the God blesses us in the next year with all the plans that we want to achieve. That is all my best wishes, guys, I have for you. Stay safe. This has been the last webinar of 2021. Get some time off, chill, get some party, and perhaps expect some short-term relief on Bitcoin. That is what we might be having in early 22. See you guys in 2022. God bless. Peace out.